Hello and welcome to Trading with Rob. I am Rob and this is the daily markup for Friday the 15th of May 2026. So overall, after a large gap down, I saw the market as having a small pullback to a low 1, parabolic wedge bottom, followed by a pullback to test the 60-minute EMA, where it then continued down for a second leg and then went into a trading range going into the close. We have the open of the day, yesterday's open and low, close of the day, 60-minute EMA and the 5-minute EMA on the chart. So after the large gap down, we have some consecutive strong bull bars on the open, showing that the market might not be completely accepting the gap down, but could also be just a pullback. Relatively small pullback in comparison to the size of the gap down, but 3 strong bull bars could be lead to a second leg up. In this case, although have to remember that moves on the open typically are much more likely to reverse than later in the day. We then have a good reversal bar for the bears just below the resistance of yesterday's low. It's a low 1 sell setup, which in a strong trend is a good selling opportunity. It is early in the day, so you might want to wait for a second entry, second signal before entering. And then had a couple of strong bear bars, testing down to the open of the day, which is a potential lower low double bottom. Also testing both the 60 and 5-minute EMAs, so quite a lot of support here. So if the market is going to bounce, it is likely to do it here. Lower low, normally initially would use the high close to the low close or low open of the range as the measured move target, but can use the high to the low to extend forward to down to have an idea of where the market might go to. Then market move down 1, 2, 3 series of bear climaxes, parabolic wedge, and very strong leg down, likely to be a breakout on a higher time frame and likely to get a second leg down in its own right. So might expect a pullback, but any pullback to be relatively minor, and then maybe a second leg down. Looking at the second leg down, leg 1, leg 2, measured move projection. Obviously, market didn't quite get there, but maybe in the closing hours it did. After the parabolic wedge down, consecutive strong bull bars, pullback from this wedge, and likely strong enough potentially for a second leg up. The other thing to say is that price at this point is quite far away from the moving average, so need to be careful as a bear. Triangle then developed after this bull leg up, consecutive bull bars. Looks like the market moved down, and once it reached the bottom of the parabolic wedge, bears who had entered on the close of this bar bought back their shorts, and the market popped back up. Again, is a bit of a triangle. 1, 2, 3, form of a wedge, deep pullback on the pullback up. So higher low testing double bottom, testing the low of the prior day, allowing trap traders out, and then of the triangle have consecutive strong bull bars breaking out above the triangle and the 5-minute EMA. Breakouts from triangles typically fail and reverse about 50% of the time, so you need to be ready as a trader for any reversal back from this. We did have a little bit of a pullback from the breakout, retest of the apex, and then a series of consecutive strong bull bars up from the apex, testing above the 60-minute EMA towards the open, significant resistance levels, and in a two-legged pullback. We then have a strong bear reversal showing strong selling, and this formed a lower high with this previous high, or this one, and an open gap showing strong selling. So really expect lower prices, large bull bar breakout, reversal, more of a breakout bar because it's broken up before, rather than a typical reversal on the 60-minute EMA, strong enough to expect a second leg down in its own right, but also we're still expecting a second leg down of this first leg from the opening reversal. Then have a wedge. It's with the trend. Strong trends are always forming wedges with the trend, so usually minor pullbacks, and we are then approaching a measured move target based on the gap from the close, the opening gap from the close of yesterday, or Thursday, to the open of the day. So might expect some support at this level, and then we go into a trading range around the measured move target. Once in the trading range, lots of two-legged moves to the top and bottom thirds, forming double bottoms, double tops, and small wedges. These are the kind of things that you want to prioritize, buy low, sell high, and scalp as you would in a trading range, and looking to scalp going into the close of the day. When looking at the best stop entries, I think below the early reversal bar after the pullback, the bull pullback after a large gap down is a reasonable sell, even if it is relatively early in the day. Could wait for a later entry in case there's a continuation up from these three bull bars, but reasonable to continue selling down on the consecutive strong bear bars. Testing the open and EMAs might be some support, so could buy above this strong bull bar, but price never actually went above it, didn't trigger, had the failed double bottom, and selling below the strong bear breakout bar is reasonable. Looking for basically a test of the measured move target or lower. Then have a strong leg down. Although these bull bars are relatively strong, they are not strong enough to expect a really strong leg up. You're in a very strong bear trend. Better to rate for a second entry, and we might be getting a continuation down, so I think reasonable to sell here, even though it is a doji. Consecutive strong bear bull bars, then breaking out of the triangle up from a double bottom, second entry, above the 5-minute EMA, and although it's the first close above the 5-minute EMA, early entry might be good, looking for a test up, but once it reverses, bit of a mixed message. 50% of breakouts from triangles fail, so at least look to get out of longs, and then once it reverses again, it's a second entry, tested the apex of the triangle, reversing, buying above the bar. Once price starts to stall above the 60-minute EMA, reasonable to think about taking profits. Scalping, we are overall still always in short. And then large bear bar even, breaking down from the test of the 60-minute EMA, good enough to sell below, expecting a second leg down. Could be the start of the second leg from this first strong bear leg earlier in the day. Selling below continuous bars, closing below the 5-minute EMA, quite close. Reasonable, strong bear bars all the way down. Measured move target, once start drifting sideways with small bars, quite tight trading range, reasonable to take profits and look to potentially reverse possibly earlier. And then once it's clear that there's a possible trading range, we've got a bit of big down up movement, reasonable to sell in the upper third of the range and buy in the lower third, looking to scalp for small profits. So overall, this is the markup for the day. I'd like to thank you for watching. I hope you found it interesting and informative. Please leave any questions or comments below and I'll do my best to get back to you. Thanks for watching.